Well, in the UK, a surprise fall in the rate of inflation has led to new bets on an interest rate cut next month. Prices rose 2.5% in December. That's down from 2.6% the month before. It's the first time inflation has fallen in 3 months. However, the rate remains some way off the central bank's target of 2%. The drop was driven by tourism, with a fall in hotel prices and a smaller than expected rise in airfares. Let's talk to Joshua Mahony, Chief Market Analyst at Scope Markets. Joshua, welcome back. Good to see you. Well, the FTSE surging on this relief over the surprise UK inflation drop, and I guess the size of relief will be heard as far as Downing Street tonight.
Yeah, certainly. I mean, look, ultimately, all the conversations over the course of the past week have been about this surge in the cost of borrowing, with Treasury yields moving towards the upside. That can be attributed to a number of things, but part of it is this perception that we're going to see a surge in terms of inflation, driven by a number of different things. It could come from Donald Trump when it comes to a breakdown in terms of trade and the potential, excuse me, for the deterioration of the pound against the US dollar to mean that we import inflation. But it also could be some of the policies that the Labour Party have enacted when it comes to the raising of the minimum wage and the raising of national insurance contributions from businesses. But nonetheless, instead of seeing that surge in terms of prices, we're seeing this good news story come to the fore, and it is emboldening markets and starting to make them think, actually, maybe we've got it wrong, and maybe we are going to see a rate cut in February, and maybe we're going to see a looser monetary policy outlook from the Bank of England.
What's your guess? Do you think this all means the UK will see more rate cuts?
Well, I mean, right now markets are pricing 84% chance that we see a rate cut in February, so that seems pretty much nailed on. Generally, you don't see central banks pushing back at such high percentages. The question mark is, how many will we see this year? Markets pricing another one to come in June. I think certainly if you look at the so-called base effects of inflation, the sort of pretty chunky inflation readings we saw at the beginning of 2024 are going to be washed out. So once we get to the back end of this year, that's most likely going to be the time when we could see the Bank of England start to ramp up those rate cuts. But really, it depends on whether we do see that sort of bump in terms of inflation from some of those Labour policies that have been enacted.
Germany's economy shrinking for a second consecutive year for the first time in more than 20 years, I think. In your view, why is that?
Well, look, their manufacturing sector was the envy of the world for a long time, and certainly it felt like everyone wanted to drive a German car. Well, what happened was there was a breakdown between Ukraine and Russia, and of course the closer you get to Russia, the more heavily reliant on Russian gas you become. And certainly in the UK it's a problem, but certainly in Germany it's a massive problem. And manufacturing is very energy intensive, and as prices rise and it becomes more difficult to get this energy imported from somewhere other than Russia, you get into a position where many of these highly energy intensive businesses just can't actually manage to operate. At the same time as this big boom in terms of Chinese EVs, the US is pushing. It feels like Europe, which has always been at the forefront of the automotive industry, has been lagging behind, and I don't necessarily see anything to point towards them suddenly making any sort of significant comeback.
Joshua, good to see you. Thanks so much for coming on the programme again. Joshua Mahony, Chief Market Analyst at Scope Markets in London.